G'day guys, Bitcoin has performed a gravestone doji candle formation off of the June lows and the November highs, which is really not good news, and we need to get into that in this video today. We also need to get into the fact that Bitcoin currently is seeing the moment in time that if it is going to go down for a new low, it will be happening now, according to the 4-year cycle theory, because we're running out of time in the 4-year cycle theory. We saw the low in November, that possibly could be the bottom, but if we're going to form a new low, what is it now, the 16th of December in Australia here today, we've got a limited period of time to do so. And so if it's going to happen very shortly. Let's get into the video, guys. Before we do that though, pin comment, description below, VIP group, you can join there for trading signals and altcoins, Crypto Academy courses, it's a university style course, teaches people how to trade. And then of course the free Telegram community discussion group where you can discuss the charts with other people on the Wolves of Crypto YouTube channel. Let's get into it. Starting out with the most important chart here. Doesn't look very good, guys. We've got a daily chart here on Bitcoin. What we have here and what I've drawn in here, in fact, I'll clear the chart just so you guys can see it, is essentially a red rectangular resistance box that stems between the June low, which you can see on the left-hand side of the screen, I'm drawing in now, okay, and the November high, which you can see over here. During that FTX drop, we formed a high there in November. That is the resistance zone for this range that we are in. We had a range up here. That range was between like 25k and like 17.6k, and we have a range down here, and that range was between 15k and the top of this local range at 18.2k, okay? What we did is we went upwards during that FOMC decision, during the CPI decision. We came upwards. We tested that range. We tried to break the upside, but we got rejected sharply. Not only was it a rejection, not only was it a typical rejection, but it was a rejection with a gravestone doji candlestick. That is what I have on this photo here. I brought this photo just so I can show you. A gravestone doji is when you have an upwards trend, you form this small-bodied candle with a long wick to the upside, and that leads to a trend reversal to the downside. That's exactly what we have seen right now. We have no reason to believe that the trend won't continue to the downside. We have that gravestone doji. We went upwards trend, long wick to the upside, small candle body, barely any wick to the downside, and essentially we saw that gravestone doji there rejected quite strongly off that 18.2k resistance, and we saw a massively red candle based off of that. Now, to add to this bearish argument here, if we go to the shorter term charts, we go to the 4-hourly chart, for example, what we can see is that not only do we have a gravestone candlestick formation on a daily, but we also have an ascending channel formation here. Let's remove this yellow line and you can see that ascending channel formation. Ascending channel formation, which is a very bearish formation. It's a pattern of exhaustion. Generally, when you see these things, you see descending volume as the trend continues to the upside. And we have seen just that. The volume has been steadily descending. It hasn't necessarily been descending per se, but it hasn't been rising at all. In fact, it's been relatively flat. We can go ahead and draw in a horizontal line here. We can see the peaks of this volume in this range has been exactly flat. You can see I'll draw it pink there. And that's not what you want to see. When you're moving to the upside so dramatically like we're doing right now, we're actually seeing quite a sharp move to the upside on the medium-term scale over the last month, going up from 15.4k all the way up to 18.4k, which is a pretty significant move. When you're doing that, you want to be seeing volume increase as we head further upwards. You want to be seeing the bullish momentum increase. When you see volume increase in an upwards trend, it means more people are getting convinced into buying as the trend continues upwards. Right now, what we're seeing is basically the trend remaining not weaker nor stronger. So that leaves this market pattern, the bearish channel formation, open to be fully exposed by the price, right? So what we have now, essentially, is this support line here, which I'm going to make pink, which could be the saving grace for Bitcoin. We will lose this channel. It's very unlikely that this channel breaks to the upside. It's extremely unlikely. It barely ever happens. Ascending channel formations, especially at this trajectory, they don't typically break to the upside. So it is very likely we lose this channel. If we lose this channel, what we're really relying on here for Bitcoin is getting caught by this pink line. If we get caught by that pink line, we have an opportunity to perhaps do something like that and retest that red zone and potentially move to the upside. But what is more likely, unfortunately, if we lose this channel is we lose the pink line as well, and then we are tossed back down into this 15.6k to 16.1k range, in which case we will be retesting the lows we made in November. This leads us into the next most important part of our video, right? Can we bottom out lower? If we do, when will that be? I want to briefly interrupt this video to talk about the BitGet Exchange. The BitGet Exchange has 5 times lower fees than Binance, which is the biggest major exchange in the cryptocurrency market on futures. It also has 0 fees on every single spot pair, so you can trade spot for entirely free, no fees included. It runs events. Right now it's got a FIFA World Cup event sponsored by Messi, the football player. It's got copy trading, strategy trading. It's got exclusive rewards and discounts in the rewards center. It's got everything you need for a trader using an exchange. This is the exchange I personally use as a trader for my everyday trading, and I highly recommend everyone does so at the Wolves of Crypto YouTube channel. Sign up using my referral link for exclusive rewards and discounts. That really helps out the channel, and I appreciate it. For my fans from the United States of America, you can sign up using this exchange with a VPN and use the exchange with a VPN and just sign up using my referral link like normal, and you'll be treated like a normal customer because this is also a non-KYC exchange. So make sure to sign up using my referral link in the pinned comment or the description below, and without further ado, let's get back into the video. Well, I can tell you right now, all right, just to answer that question just off the bat, I can tell you right now, we can bottom out lower. It's very much possible we bottom out lower. If we do go lower, if we do bottom out lower, it will be between 13.8k and 11.5k. Those are our nearest support zones by all metrics, by both visual metrics and both by volume profile metrics as well. Even the 400-week SMA, which we can bring up right now, which I should have over here somewhere, is at that 13.8k level. That is the next low if we lose this 15k level, 13.8k to 11.5k. But I do want to stress the fact that it's not guaranteed by any sense of the imagination at all that we go lower, right? We could very well bottom out here. We've got horizontal support, okay? I'll draw it pink so you can see it. And we've got this 8-year uptrending support line. This is a strong support zone we have at 15k, 15 to 16k, all right? So it's not guaranteed we lose it. But, you know, playing devil's advocate, if we do lose it, what would happen? Yeah, we'd go down to 13.8k to 11.5k. And if we do lose it, when would that happen? Well, according to the 4-year cycle theory, we will bottom out in Q4, which is right now in December, or we could have already bottomed in November, by the way, or into January, right? As soon as we start extending past January, that's when the 4-year cycle theory gets very weak. We can extend into January. The 4-year cycle, 3 separate occasions is played out. It's not strong enough to be able to give us a very specific date and price point as to where we will bottom out. It's a vague region. That's why I said Q4, right? Q4, very vague. We can't be more precise. As the cycles progress on, right? For example, next cycle, when we go in the bear market in 2026, we will be able to be a bit more precise. We'll be able to say, okay, it's going to be this month. And then as we go further than that, we'll be able to say, okay, it might be this fortnight, right? Right now, it's very, very rough. So I'd say that if we do go lower, it would be to that 13.8k to 11.5k region. And if we do go lower, it will be within this month, December, or January, right? I don't see Bitcoin bottoming out in February or later. And if it does, that would partially ruin the 4-year cycle theory and destroy a massive macro trend on Bitcoin that will ruin Bitcoin's long-term predictability, right? So right now, what we're seeing as well, S&P 500 rejecting from resistance. It had a major downtrending resistance line stemming from January. Rejection, sharp rejection with a long week to the upside. We're currently holding support on that level here that I'll make pink so you can see it at around 3,913, right? That's currently a support level that we're holding. But ultimately, I don't have strong hopes for traditional markets. I think that unless something very abnormal happens, they will continue to go down. It's very rare for traditional markets to bottom out while interest rates are rising. In fact, I don't think it's ever really happened. And so, yeah, that would be very interesting if that did happen. That would break 50 years worth of price action. So, yeah, I don't expect the S&P to be bottomed out here. I do think that will go lower. But that's just based on historical data. But I don't think, and it's very important to note, I don't think that Bitcoin will be bottoming out at the same time as the S&P, in the same way that I don't think that Bitcoin did not bottom out at the at the same time as the S&P. So Bitcoin topped out in November, S&P topped out in January. By the time S&P topped out, Bitcoin was down 50%. 40%, I think. So, to act like these things have to bottom out and top out together is completely ridiculous. They don't by any means. So Bitcoin can very well bottom out a lot earlier than the S&P. And one thing about that in regards to rate hikes, in regards to FOMC, is this. We've got a 72% probability on the next rate hike, which is going to be February 1st, of a 25 basis point hike. What we saw before was a 50 basis point hike. Before that was a 75. So the rate hikes are very much trending downwards, and we will definitely be seeing an S&P 500 bottom in the year of 2023, perhaps the latter part of it. But I do think 100% we'll be seeing an S&P 500 bottom in 2023. I think that these rate hikes will stop rising. I think the Federal Reserve is targeting at least 5%. We're at 4.5% now. Assuming they raise 25% in February and 25% in March, we could be seeing the first rate decrease as early as May. Generally speaking, they hold their rates at a certain level for a certain period of time. So you're probably looking at June or July. So the middle of 2023, we could be seeing those rate hikes start to actually go downwards. We could see a decrease in rates in the middle of 2023. And that's by the market's expectations. That's not even my opinion. That's what the market is expecting. So, S&P 500 could bottom out, say, June or July, middle of the year at the earliest, right? At the earliest, June or July. You got to remember, look at what happened in the bull market, right? Bitcoin topped out 2 months before the S&P, right? If Bitcoin bottoms out in say January, S&P tops out in June, it very well makes sense. It's not completely out of the ordinary. You also have to remember, guys, that Bitcoin, it follows the S&P, it follows traditional markets, but it also acts very much in its own accord. The 4-year cycle at this point in time is what we see as the strongest trend on Bitcoin. This is the thing that has predicted tops and bottoms. The S&P hasn't predicted tops and bottoms for Bitcoin. It's the 4-year cycle that predicts tops and bottoms, even during the recession, which was going on, in my opinion, or at least starting up, in November 2021, that was clearly a bad time, right? Inflation was already at like 40-year highs at that point. Even during all of that havoc, all of that chaos, where Bitcoin should have been following the S&P, Bitcoin still did its own thing according to the 4-year cycle theory. So I don't have any reason to believe it won't do anything, won't do its own thing to the downside either. So I suppose the only points of this video that I really wanted to get across, really wanted to display, is the fact that the daily chart, 4-hourly chart, short-term in general, doesn't look very good. We rejected very strongly from a resistance zone, and we could very well go downwards further in terms of macro lows, and if we do so, it will be within December and January, and it will probably be between that 13.8k to 11.5k level. But none of that is confirmed at this point. The low is still in at this point, but we just need to watch the charts and monitor the situation. Thanks for watching, guys. Hope you enjoyed the video, and I'll catch you in the next one.